welcome to lecture number 38, where we'll be continuing with module number 6, that is MAT, Minimum Alternative Tax, under subject Direct Taxation. So, as per video syllabus, we know we have how to compute the taxable income of a company with special reference to MAT and problems on MAT. So, computation we have already seen in lecture number 37. So today we will just revise on the computation of taxable income of a company with special reference to MAT, and we will be seeing problems on MAT. So how to calculate the tax liability under MAT is nothing but minimum alternative tax is nothing but equal to 15% of book profits. And how to calculate book profit we will see. Plus, you have to add surcharge and cess if applicable. Cess will be applicable in all the cases. Surcharge will be applicable only when the total income of a domestic company exceeds 1 crore but does not exceed 10 crore. Cess surcharge applicable is 7%, and 12% it is applicable when the total income exceeds 10 crore. So remember students, only when the company's total income exceeds 1 crore, then surcharge at the rate of 7% will be applicable. And when the income exceeds 10 crore, then 12% surcharge will be applicable, and 4% is in all the cases. Now, how to calculate book profit? We know that we have to take profit as per the net profit as shown in the P&L account, and we have to add and delete some items. Now, what has to be added to the net profit? Income tax paid or payable, transfer to any reserves, proposed dividend, provision for loss of subsidiary company, depreciation, including depreciation on account of revaluation of assets. So whatever is important here, let me just tell you, income tax paid or payable will frequently be asked, transfer made to reserve, dividend proposed, provision for loss of subsidiary company, depreciation. This is not depreciation as per Income Tax Act. This is normal depreciation. So depreciation, including depreciation on account of revaluation of asset, you have to add it to the net profit. Provision for unascertained liability also is frequently asked. So all this you have to make additions to the net profit. Deletions to net profit is if you're withdrawing anything from any reserve, any exempt income, you have to delete, minus it from your net profit. Now, your depreciation is there, but excluding depreciation on revaluation of assets. So when you're calculating the tax to be payable as per MAT, you have to consider depreciation, which is normal depreciation. But when you're calculating the tax to be payable under the normal provisions of income tax, then you have to consider depreciation as per section 32, that is depreciation as per Income Tax Act. So for book profits, normal depreciation. For income tax provisions, as per income tax provisions, you have to take depreciation as per section 32. And then brought forward losses or unabsorbed depreciation, whichever is less, is to be deleted from the net profit. So these are the most frequently asked ones, that is brought forward loss or unabsorbed depreciation, whichever is less has to be deleted from the net profit. Now, as and when we solve the problems, you will get familiar with all these terms. So what we have to do, first step is you have to calculate tax as per the normal provisions of income tax, where you have to apply a tax rate of 30% plus 4% plus surcharge and plus 4% education cess. And second thing is you have to calculate tax liability as per the MAT provisions, which is nothing but 15% plus your surcharge and plus 4% education cess. You compare the tax liability of both, whichever is higher, that is the tax to be paid by the company to the government. So MAT provisions are covered under section 115 JB. This was a revision. Now let us see the problems on MAT. Okay. Is the screen visible to everyone?
Yes, ma'am.
Yes. Okay. So in our previous lecture, we had computed the taxable income as per the Income Tax Act. Correct? We had finished the lecture up to there. Now, what is our steps? First, calculate taxable income as per IT provisions. Second step, calculate taxable income as per the book profit as per the section 115 JB. Then calculate tax on both, whichever is higher, that is the tax to be paid. So in a previous class, we had completed with total income as per the Income Tax Act, that is 105. Year students. Up to year we had completed. Now let us start with calculating the book profit. Okay, so how do we start calculating the book profit? First of all, we take profit as per the P&L account. Always while calculating the book profit, first you have to take the net profit as per the P&L account. So what is the net profit as per P&L account? 215 lakhs. To that 215 lakhs, we have to make certain additions and certain deletions. So let us examine one by one item to know what are the additions and deletions to be made. Okay. So first, in the credit side, we have dividend income from Indian companies, that is 20 lakhs. So tell me students, is dividend income an exempt income? Yes students? Here you know that deletions to net profit is you have to make all the exempt income has to be minused from the net profit. Therefore, dividend income is an exempt income. Therefore, you are going to deduct 20 lakhs from the profit and loss account of uh, 215 lakhs. Now, excess realized on the sale of land held as investment. Now, this item is nowhere given in the additions and deletions list of section 115 JB. So here in the credit side, this is credit side towards my right hand side, and towards my left hand side is all the items that are debited to P&L account. So here nowhere it is given that uh, anything on the sale of land of held as investment or capital gains should be added or deducted. Nothing is given while calculating the book profit, so we leave it as it is. Next, debit. Debit depreciation on straight line basis. Now tell me students, whether depreciation when it is debited to P&L account in order to calculate book profit, it should be added, yes or no? Here we have seen additions to net profit, that depreciation including depreciation on account of revaluation of asset has to be added back to the net profit. So this depreciation on straight line basis will be added to the net profit. Next, provision for loss of subsidiary company 60 lakhs. So here we have seen provision for loss of subsidiary company, additions to net profit. So you are going to add it to the net profit. So first, whatever we have discussed, we'll just put it in the form of C students. Computation of book profit under section 115 JB. First, you have to take net profit as per the statement of profit and loss account. That is, you have taken 215. Correct? To that, you're going to add provision for loss of subsidiary. That is 60. Depreciation, you're going to add it back. That is 100. Okay, less dividend income, that is exempt, so 20 you're going to deduct it. Then depreciation also you're going to deduct 100. Why? Because students, see, look at the right hand side. Here depreciation you're supposed to deduct excluding depreciation on revaluation of asset. But here in this problem, depreciation on revaluation of asset is not given. Only depreciation is given. So what you're going to do? Normal depreciation, you're going to add, and you're going to also deduct depreciation. So 100. Next, Next, depreciation allowable as per Income Tax Act 1962. So what I told you, while computing book profits, you need not take depreciation as per the IT rules. You have to take the normal depreciation that the company has followed. So this becomes irrelevant while computing the book profit. Next, short-term capital gain on the sale of the land is 40 lakhs. This is under Income Tax Act. So under calculation of book profit, this becomes irrelevant. Next, losses brought forward as per the books of account, as per the Income Tax Act is business loss 50 lakhs, unabsorbed depreciation 60 lakhs. Now, what does the computation of book profit tell us? That brought forward loss, see the right hand side, the last row, brought forward loss or unabsorbed depreciation, whichever is less, that you're supposed to deduct. So among the business loss and unabsorbed depreciation, which is the lesser amount?
Business loss.
Business loss. Therefore, you are going to deduct business loss, which is less than unabsorbed depreciation, rupees 50 lakhs. So you're going to deduct all these from the net profit. So you get the book profit as 205. See students, there is a difference between computation of total income as per Income Tax Act, normal provisions of Income Tax Act, and there is a difference in computation of book profit. Book profit has fixed items of additions and deletions. If you follow that, you will get your book profit. What is our next step? Our next step is, third step is to compute the tax liability as per the normal provisions of Income Tax Act. Now we know as per the normal provisions of Income Tax Act, our income is 105 lakhs. So 105 lakhs means it is 1 crore 5 lakhs. So when the total income is 105 lakhs, that means it is exceeding 1 crore. If the income of a particular company is exceeding 1 crore but does not exceed 10 crore, surcharge will be applicable at the rate of 7%. So first what do we do is, we take the total income. What is the total income? It is 105. On 105, what is the rate of tax that you're going to charge? That depends on the turnover in the previous year 16-17. The turnover in previous year 16-17 is only 240 crores. So the tax rate applicable will be 25%. So 25% of 107 lakhs, you get 26 lakh 25,000. On that you will add surcharge 7%. Why are you adding surcharge of 7%? Simply because your total income is exceeding 1 crore. So surcharge is tax on tax. So you're going to charge surcharge on 26 lakh 25,000, which comes to 1 lakh 83,750. You add the both taxes, you get 28 lakh 8,750. On that you need to add health and education cess at the rate of 4%. After adding, you get the total tax payable as per income tax. Okay. Next, fourth step is to compute the tax payable as per MAT provisions. So we know as per MAT provisions, tax is nothing but 15% of book profit. And book profit, we computed it to be 205. So 15% of 205 lakhs is 30 lakh 75,000. To that you will add surcharge. Why surcharge? Because your book profit is exceeding 1 crore but it is not exceeding 10 crores. Therefore surcharge applicable is 7%. So 7% of 30 lakh 75,000, you get 2 lakh 15,250. To that you add health and education cess at the rate of 4%. Then you get 1 lakh 31,610. So your tax as per MAT provisions is 34 lakh 21,680. Now students, we got the tax to be payable as per the IT provisions. We got the tax to be payable as per the MAT provisions. Now, what will be your final answer? What is the amount of tax that the company has to pay to the government? Can you all answer? whether as per the income tax he has to pay or whether as per MAT provisions.
Math
Math
provision, ma'am.
provision.
So your final
Math
answer,
provision.
very good students. So your final conclusion will be, since 15% of book profit exceeds the tax payable as per the IT Act, book profit would be deemed to be the total income and tax payable on such income shall be 34,21,860. Therefore, the company will pay tax, that is amount of 34,21,860 rupees. So is this sum clear, students? How to calculate total income as per the normal provisions of IT, you all are very well versed with it. But book profit, it will take some time. But the items that keep on repeating, I'm just again revising it. Remember, income tax paid or payable, add to the net profit. Depreciation. Depreciation, if it is having depreciation on revaluation of assets, you include that and add to the net profit. But when you're deleting depreciation, you have to exclude the depreciation on revaluation of asset and delete it. That is minus it. So remember, once again, I'm repeating, when it is relating to depreciation and you're calculating book profit, don't consider as per IT provisions. Take the normal depreciation, add to that revaluation of asset and add it to the net profit. But when you're minusing from the net profit, minus only the normal depreciation, excluding the depreciation on revaluation of asset. The next important thing is brought forward loss or unabsorbed depreciation, whichever is less, that you're supposed to minus it from your net profit. And as and when we do the problems, I will help you all remember. Next, can we move ahead to problem number 2? Yes, students?
Ma'am,
Yes.
ma'am, here math credit will not be applicable.
Sorry, you are not audible. Can you repeat? What was your question?
Ma'am, here math credit will not be applicable.
MAT credit will be applicable. But in the, what is the question that they are asking? Question is, they are asking is, compute the total income and tax payable. They didn't ask for MAT credit, correct? But yes, you can write additionally in the end that since the minimum, since the tax payable is as per the MAT provisions, how much will be the MAT credit, students? 34,21,860 minus 29 lakhs minus 29 lakhs 21,100. So your MAT credit is going to be 5,760. You can write an additional note, not an issue. Why MAT credit will be applicable? Because you are paying tax as per MAT. Then only MAT credit will come into picture. And yes, you are correct. You can write an additional note. But since the question was limited to compute the total income and tax payable, we didn't calculate MAT credit. But yes, you can add that also to your answer, that MAT credit is 5,760 since the tax payable by the company is as per the MAT provisions. Therefore, MAT credit is nothing but tax payable as per MAT minus tax payable as per Income Tax Act. So it comes to 5,760. Is it clear, students?
Okay, ma'am.
Yes.
Thank you, ma'am.
You can write that additionally below the final answer. You can write additional note that MAT credit is 5,760.
Okay, ma'am.
Okay. Can we move ahead to the second problem? Yes, students?
Yes, ma'am.
Okay. Sona Limited, a resident company, earned a profit of 15 lakhs after debiting and crediting the following items of its statement of P&L account for the year ended 31/3/2020. So items that are debited to the statement of P&L account, when I say debited means it will be on the debit side. Provision for loss of subsidiary 70 lakhs, provision for doubtful debts 75,000, provision for income tax, provision for gratuity based on actuarial basis, depreciation, interest to financial institution, penalty for infraction of law. Items credited to the P&L account is profits from the unit established in SEZ, share of income of an AOP as a member, income from the units of UTI, long-term capital gain on sale of building. Now, here, additional information. Depreciation includes 1,50,000 on account of revaluation of fixed assets. So when you're going to add this to the net profit, you're going to consider full 3,60,000. But when you're going to deduct it from the net profit, you have to exclude the depreciation on revaluation of assets. Depreciation of income tax means this depreciation we have to consider if we are going to calculate total income as per Income Tax Act. Brought forward loss is 10 lakhs, which includes unabsorbed depreciation of 4 lakhs. The capital gain has been invested in the specified asset specified under section 54EC. The AOP of which a company is a member has paid maximum marginal rate. Provision for income tax include 45,000 interest payable on income tax. Compute minimum alternative tax under section 115 JB of Income Tax Act for the assessment year 2020-2021, assuming that Sona Limited is not required to comply with Indian accounting standards. So students, have they asked us to calculate the tax payable of Sona Limited, or they have asked us just to calculate what is the tax payable under MAT? Simply don't just do what is asked in the problem, because you will be wasting time otherwise. See students, here they are just telling compute MAT under the section 115 JB of Income Tax Act. That is it. They are not telling us what should be the tax to be paid by Sona Limited. Is this clear? So here our computation will be only to compute the book profit, to take 15% of book profit, and that will be the minimum alternative tax that is asked. That is a question that is asked in the problem. Is this clear, students? Is the question clear? Now by step we will go. So first, they're just telling us calculate what is the tax liability as per MAT. They are not telling us to calculate what is the tax payable. So we will limit our answer only to calculate the tax liability as per MAT. Now, in order to calculate tax liability as per MAT, we know that tax liability as per MAT is nothing but 15% of book profit. Now, in order to know the book profit, first we need to compute the book profit. Now, book profit is nothing but P&L account. That is, what is the profit? 15 lakhs. Now, let us see whatever items are debited, whether we have to add it or no. Okay, so to this 15 lakhs, what we have to do? First, provision for loss of subsidiary. Should we add it to the net profit or should we ignore it? Is it there in the addition list, students? Provision for loss of subsidiary. See here, additions to net profit. Provision for loss of subsidiary company. We are supposed to add it in order to derive at the net profit. Is this clear? So this has to be added to the net profit in order to arrive at the book profit. Is this clear, students? First point.
Yes, ma'am.
Next, provision for doubtful debts. Should we add it to the net profit or should we ignore it? See, while calculating book profit, only two things you need to know. Whatever items are debited, you are supposed to add it. Whatever items are credited, you are supposed to minus it. Now, whether to add it or ignore it, that is based on that specified list. Now, provision for doubtful debts. Should we add it or ignore it? See students, it is a provision for unascertained liability, correct? You don't know, you know that the doubtful debt is of some amount, but later you don't know, you may recover that amount. So it is an unascertained liability. See here students, additions to net profit, provisions for unascertained liability, provision for bad debts, that is doubtful debts, 75,000. So you're going to add it to the net profit or ignore it, students?
Add it, ma'am.
Add.
Very good. Next, provision for income tax. You're going to add it or delete it. Oh, sorry, add it or ignore it. Here we have already have that income tax paid or payable, which also includes provision, correct? So this provision for income tax, here in additional information is given that provision for income tax also includes 45,000 for interest payable on income tax. And I told you, in case of income tax, it is also interest that you're paying on income tax, provision that you're making on income tax that you have to add. Okay, so the first point, income tax paid or payable or provision for that, or interest on income tax, everything should be added. So this provision for income tax, you're going to add it or ignore it? Yes? Yes, students?
Add it, ma'am.
Very good. Provision for gratuity based on actuarial basis. See, any provision that is made on certain liability, a certain liability means liability which you know. So on actuarial valuation means you know that the actual gratuity that you have to pay is 2 lakh and you're making provision for that. So that has to be ignored. When you have to consider that, then provision is made for only unascertained liability. When provision is made for a certain liability you know, on based on actual calculation, you know your liability is going to be XYZ amount. You're making provision for that. So you have to ignore it. You have to not add it to the net profit. But provision for unascertained liability has to be added back. Now this, it is based on actual valuation. So you know that your gratuity is going to be 2 lakh rupees. So you have to ignore it or you have to consider it in the addition of net profit, students. Yes. See, students, only provision for unascertained liability you have to add it. Provision for certain liability which you know is based on actual basis, you have to ignore it. So tell me, students, provision for gratuity based on actuarial valuation, whether you will add it or whether you will ignore it.
Ma'am, ignore.
Very good.
Ignore it.
Next. Correct. Next, depreciation is 3,60,000. Okay, students. Now, your depreciation includes 1,50,000 on account of revaluation of fixed assets. Means in this amount of depreciation, 3,60,000, you have 1,50,000 which is on account of revaluation of fixed assets. Now, and this is as per normal depreciation. So tell me, students, depreciation, whether you will add it to the net profit or ignore it. See here, students, depreciation, you have to add it to net profit, including depreciation on account of revaluation of assets. So tell me, students, this depreciation, you'll add it to the net profit to get the book profit or you'll ignore it?
Add it, ma'am.
Add full 360 or you're going to minus 150. What amount of depreciation you have to take? Depreciation including depreciation on revaluation of fixed assets. So in this already 1,50,000 is included. So you're going to take complete 3,60,000. You're going to add it to the net profit. Next, interest paid to financial institution unpaid before filing of return. Now, whether this is given anywhere in the additions to net profit list, it is nowhere given. Interest amount nowhere given, so just ignore it. Next, penalty for infraction of law. Is anywhere they have given ki any penalty for going against the law you have to add it to the net profit? This is a fixed list of items, students. Nowhere it is given, that penalty word is not given, that penalty for going against the law, infraction of law, you have to add it. So you have to ignore it, because while calculating book profit, they are fixed items which you have to add and ignore. So we know all the items that has to be added. Now let us just put it in the form of the format. So computation of book profit for levy of MAT under section 115 JB for assessment year 2020-2021. Net profit as per P&L account, we have taken 15 lakhs. Add net to net profit to be increased by the following amounts as per explanation 1 to section 115 JB. So this chart is nothing but explanation 1 to 115 JB. Provision for loss of subsidiary, provision for doubtful debts, provision for income tax, and depreciation. All these items you're supposed to add to the net profit. You get 21,10,000. Now let us see what are the items that you have to delete from the net profit. So did everyone understand the addition to the net profit? Now let us see the items that you have to delete from the net profit. Profit from unit established in special economic zone. Whether you have to ignore it or whether you have to minus it. Anywhere have they given SEZ here? See the deletions to net profit. Anywhere the word of special economic zone is it given, students? There is no special economic zone word given. So this you are supposed to ignore it. Next, share in income of an AOP as a member. So anywhere is this given share of an income of an AOP as a member? Here it is given. Deletions to net profit, you can see here, share of the SSC in the income of an AOP or BOI has to be reduced from the net profit because it is given in the specified list. That is the reason you're going to minus this 1 lakh rupees. Is this clear, students? Next, income from the units of UTI, 75,000. Are you going to minus it or are you going to ignore it? So see here, students, gain on the units of business trust has to be deleted or minus from the net profit. It is clearly given. Therefore, you're going to deduct income from units of UTI. Next, long-term capital gain on the sale of building. Now, anywhere in the specified list have they given long-term capital gain on the sale of building? No, nowhere there is a long-term capital gain on the sale of building that you have to deduct. Therefore, you're going to just ignore this particular information. Okay. Next, what you're supposed to delete, students? You're supposed to delete depreciation, but depreciation excluding depreciation on revaluation of asset. So we have 3,60,000 depreciation. From 3,60,000, you're going to minus 1,50,000. Because while deducting, we have to deduct depreciation other than depreciation on revaluation of fixed asset. So 3,60,000 minus 1,50,000, only 2,10,000 depreciation you're supposed to deduct. Okay, so this part is completed. Depreciation as per income tax rule, you need not consider this only because you're calculating tax payable as per MAT. Next, brought forward losses 10 lakhs, which includes unabsorbed depreciation of 4 lakhs. So how much is the net brought forward loss? 6 lakhs. And unabsorbed depreciation is 4 lakhs. So what are you going to deduct? You're going to delete or minus brought forward loss or unabsorbed depreciation, whichever is lower. So 6 lakhs or 4 lakhs, whichever is lower. What are you going to deduct? See here, last point. Brought forward loss or unabsorbed depreciation, whichever is less, you're going to deduct. So is 6 lakhs less or 4 lakhs less? What are you going to deduct?
4 lakh, ma'am.
Okay. Next, capital gain. This information is irrelevant to calculate book profits. Then the AOP we have completed and the provision of income tax also we have considered. Okay. Now let us just put whatever we have discussed in the format. Less net profit to be decreased by the following amounts. Share of income of an AOP as a member 1 lakh. Income from units of UTI 75,000 we are going to deduct. Next, depreciation other than depreciation on revaluation of asset 3,60,000 minus 1,50,000, that is 2,10,000. Unabsorbed depreciation or brought forward loss, whichever is less as per the books of accounts. So 4 lakh you are going to minus. So therefore the amount that you have to minus is 7,85,000. So your book profit comes up to 13,25,000. Now, how are you going to compute the liability? We know as per MAT, the liability is 15% of your book profit. So 15% of 13,25,000 comes to 1,98,750. To that, you are not going to add surcharge. Why are you not adding surcharge? Because your total income, that is book profit, is not exceeding 1 crore. When it is not exceeding 1 crore, surcharge is not applicable. So directly you will add health and education cess at the rate of 4% on 1,98,750. So your tax to be paid as per MAT is 2,06,700. Your answer completes here because they have asked to only that much. They have asked to only compute minimum alternative tax under section 115 JB of Income Tax Act. Suppose if they could have asked you what is a tax to be payable, then you would compute the tax to be payable even as per normal provision of income tax. Next, just I have written the explanation to why we didn't take interest to financial institution and penalty for infraction of law. And provision for gratuity is based on actual valuation and it is an ascertained liability. Hence, it should not be added back. Okay. And profits from the unit of special economic zone cannot be excluded while computing the book profit, and hence that income is liable to MAT. So did everyone understand the problem number 2? Yes, students?
Yes, ma'am.
Okay. Now let us move ahead to problem number 3. In problem number 3, they're telling compute the net income and tax liability of X Limited for the assessment year. Sorry, it should be 2020-2021. Assuming that X Limited has a deemed long-term capital gain of 60,000, which is not credited to the P&L account. So they have given us the P&L account, students. This is all the incomes less all the expenses to get the net profit. Here they have told that the company wants to claim set off of deductions under section 80 IB, depreciation under section 32. When I say under section 32 means as per Income Tax Act, the depreciation is 5,36,000. Brought forward losses is 14,80,000 and 40,000 for accounting purpose. And unabsorbed depreciation being 70,000 for accounting purpose, and assume the tax rate at 25%. So here they are telling us to calculate the net income and tax liability. So what is our calculation going to be, students? What are the steps that we need to follow? Yes, students. What are the steps that we need to follow? First, you need to calculate the total income as per the Income Tax Act. Then you need to calculate the book profit as per MAT provisions. Then you need to calculate the tax liability on income tax as per the Income Tax Act. Then you need to calculate the tax liability as per the MAT provisions. Compare the tax liability. Whichever is higher, you need to pay, the company needs to pay that amount. Is this clear, students? Yes?
Yes, ma'am.
Okay, so our solution number 3 starts with first computation of net income and tax liability of X Limited for the assessment year 2020-2021. This we are going to calculate as per the normal provisions of income tax. Okay, that which you all are very well versed with it. So how do we calculate tax total income of a company in respect to normal provisions of income tax? First, again, we take net profit as per the P&L account. We add back all those expenses which are disallowed. We deduct all those incomes which are to be taxed under other head of income. Is this clear? So always we start with the net profit. So net profit is 11,80,680. Now let us see all those expenses which are disallowed and has to be added back to the net profit. Now business expense, is it allowable or is it disallowable? This we are doing as per the normal provisions, students, of Income Tax Act. Tell me, business expense, is it okay if they have deducted it or should we add it back to the net profit? Is it an allowable expense?
Non-allowable expense.
It is an allowable expense. So we have to ignore it. Now, depreciation, this is normal. This is not as per Income Tax Act. So what we have to do, students? As per the Income Tax Act, if we are going to calculate the total income, should we consider normal depreciation or should we consider depreciation as per Income Tax Act? We have to always consider depreciation as per Income Tax Act when we are doing the calculation of total income as per Income Tax Act. So this is an disallowed expense. Normal depreciation and depreciation because of revaluation, it is an disallowed expense. Why? Which depreciation is allowed? Only the depreciation which is calculated as per Income Tax Act. So in our point number 2, we have here depreciation under section 32 is 5,36,000. So this is allowable. Whereas this too is disallowable. So if it is disallowable, you are going to add it to the net profit. So what is the amount that you're going to add it to the net profit? 6,16,000 plus 2,70,000. And what is allowable? Allowable is 5,36,000. So from that minus 5,36,000, so only 3,50,000 you're going to is the extra depreciation that you'll have claimed. That is what you have to add it back. Is this clear? Is the depreciation part clear, students? Yes?
Yes, ma'am.
Okay, next. Salary and wages. Is it an allowable expense or disallowable expense?
Allowable expense.
So if it is allowable, you need not add it to the net profit. Income tax. Is it an allowable expense under income from head business and profession or disallowable expense?
Disallowable.
Very good. If it is disallowed, you're going to add it back. Next. Outstanding custom duty which is not yet paid. Allowable, disallowable. Custom duty is relating to your business, agreed, but it will be allowable only when you're actually paying it. It is not yet paid. It is not on actual basis. Therefore, you're going to disallow it. Next, proposed dividend, allowable, disallowable. We have seen that any proposed dividend is a disallowable expense. Just if you announce and keep that the company is going to pay dividend, but actually it has not paid yet. So it is a disallowable expense. You're going to add this back. Consultation fees paid to an tax expert. Allowable, disallowable expense. Students, it is relating to business, right? Because business has to pay tax, so you're paying consultation fees. So it is an allowable expense. Next, other expenses also is an allowable expense. So we have bifurcated what has to be added, disallowable expense, and what has to be added back. Now let us see the credit side. Okay, what has to be deducted? Sales. Will you deduct it or is it relating to business? It is an income relating to business, so you will not deduct it. Next, sale, proceeds of goods, export sale. This also you will not deduct it from the business. Amount withdrawn from general reserve and amount withdrawn from revaluation reserve, you will deduct it because simple reason being it is a amount. It is not your income from the business or profession. It is your income by taking the money out from the reserve. So it is not relating. So that is the reason you are going to minus it. So let us see, just put it in the format. Net profit as per P&L account, you have taken 11,80,680. This calculation we are not doing as per MAT. This calculation we are doing as per the normal provisions of Income Tax Act. Add depreciation. Which depreciation? Excess depreciation. This was a depreciation which was normal, plus this was depreciation on revaluation of asset, minus depreciation as per Income Tax Act. So how much extra depreciation did you minus earlier? 3,50,000. So that 3,50,000 is unreasonable. It is disallowed. Therefore, you're adding back to the net profit. Income tax is disallowed. Therefore, you're adding back to the net profit. Custom duty, which is not yet paid, is disallowed. You're adding back to the net profit. Proposed dividend, you're going to add it back to the net profit. Total of all this addition comes to 7,77,500. Less the items that you're going to deduct from the net profit is amount withdrawn from general reserve and amount withdrawn from revaluation reserve. You're going to deduct it. Now, there is information given that brought forward loss is 14,80,000 for tax purpose and 40 lakhs for accounting purpose. So we know that brought forward losses can be set off against the business income, correct? So which amount are you going to take, as per the tax purpose or as per the accounting purpose, students? Now what are we calculating? Tax liability. So which brought forward loss amount are you going to take, as per tax purpose or as per accounting purpose? Common sense, just use your common sense and tell me, if you are calculating the tax liability, which amount will you take for brought forward losses? The amount
As per
as per
tax.
tax. Very good. That is why less brought forward loss of 14 lakhs 80,000. So total when you do, you get 18 lakh 30,000. So your total business income net after minusing the unabsorbed loss comes to 1 lakh 28,180. Next, this becomes your business income. Next, there is a long-term capital gain also. Let us see. Here they had told students in the first line, there is a long-term capital gain of 60,000, which is not shown in this P&L account. So 60,000 becomes your income from the head, capital gains. Therefore, you have written long-term capital gain separately 60,000. Then after getting the business income, long-term capital gain, you get what? You get gross total income. From that, you're going to minus deductions. So your deduction is given under section 80 IB, that is 30% of rupees 11,80,680. So you have taken less deductions. So that comes to 38,454. Okay. Then you get the net income when you minus the deductions. Net income is nothing but take the gross total income minus the deduction, you get the net income. Now, to this net income, you have to minus unabsorbed depreciation, because we are doing as per the normal provisions of income tax. But should we take this amount of unabsorbed depreciation, students? Because this is 70,000 for accounting purpose. So should we consider unabsorbed depreciation? Should we minus unabsorbed depreciation? We should not, because it is not for accounting, it is not for tax purpose, it is just for accounting purpose. But suppose if they would have given for tax purpose, then at the last you have to always minus from the net income unabsorbed depreciation, that we have seen in problem number 1. So your tax liability is what? This is the income as per the normal provisions of income tax, students. Now what will be the tax liability? It is 25%. 25% of 1,49,726, which comes to 37,431.5. You're going to add health and education cess. Surcharge is not applicable because the total income is not exceeding 1 crore. So 4% if you add, you will get 1,497.26. So your total tax liability as per Income Tax Act comes to 38,928. So you will round it off. So your total tax liability as per the income tax provision is 38,930. So this is a calculation of tax liability as per the normal provisions of Income Tax Act. In our next lecture, we will be seeing the computation of book profit and tax liability as per the MAT provisions, and we'll compare the both. Whichever is higher, we are going to pay, X Limited has to pay that amount of tax to the government. Is this clear, students? Yes? Did everyone understand up to here?
Yes, ma'am.
Yes? Students, I'm asking, you already all understand? This
Yes, ma'am.
problem we're leaving it half because of time constraint. We'll continue it in the next lecture. So students, as per the normal provisions of Income Tax Act, I need not explain so much because we have already done in module number 3. Only main thing is how to calculate the book profit, additions and deletions to net profit you need to know. So let me just ask your students, okay, normal depreciation including depreciation on revaluation of asset. You're going to add it to the net profit, but when you're going to delete it from the net profit, you're only going to delete the normal depreciation, excluding depreciation on revaluation of asset. But when you're calculating as per Income Tax Act, you're going to take depreciation as per Income Tax Act. Okay. Students, tell me, unabsorbed loss and unabsorbed depreciation. For this particular item, what are you going to do under the normal provisions of income tax and what are you going to do under MAT provisions? Can anyone tell me? Unabsorbed loss and unabsorbed depreciation, if it is given in the problem, how are you going to treat this item when you're going to calculate the income as per MAT provisions? What are you going to do with this item? You're going to delete it from the net profit. What are you going to delete? Both unabsorbed depreciation as well as unabsorbed loss, or lower of the both?
Lower of the both.
Okay. And in case of when you're calculating total income as per the normal provisions of income tax, whether you're going to take lower of the both or you're going to minus both. First, you're going to minus unabsorbed loss, and then at the last, you're going to minus unabsorbed depreciation. What are you going to do? When you're calculating as per the normal provisions of Income Tax Act, first from the business income, you're going to minus unabsorbed loss. Then from the total income, you're going to minus unabsorbed depreciation. Only if it is as per the tax purpose and not accounting purpose. Is this clear, students? Yes?
Yes, ma'am.
Thank you so much, students.